It's my great pleasure today to meet with Aatu Kokkila, who is the Darwin provider behind the THA Darwin. This Darwin currently has $7 million of investment, and although Aatu and myself are both traders on the Darwinex platform, we both have very different trading styles. While I'm an algo trader trading different patterns in price action, Aatu is an economic news trader. And you're really not going to want to miss this interview. Aatu is one of the best news traders and has recently won the CTA Hedge Fund award for his performance over the last 5 years. Okay, so let's get straight into this and meet Aatu himself. Hi Aatu, thank you so much for taking the time out of your schedule today to speak with me.
Thanks for having me, Martyn. It's a big pleasure to join you.
Great stuff. So I think the viewers would be really interested, Aatu, if you could explain a little bit about your background and specifically how you think that's helped you on your journey to become the trader that you are today.
Sure, happy to. I mean, I've been trading close to 10 years now, 7 years managed accounts, 3 years on my own, then 7 years managed accounts, and then we had a usage hedge fund for 3 years, and now we are consolidated at Darwinex Kokkila. It's sort of a quasi hedge fund, I suppose that, and we are an investment advisory. And before that, during my teenage years, I was a semi-professional World of Warcraft player. I used to teach people how to play the game. I was one of the best players back then when there was 11 million people playing the game. And yeah, I mean, thankfully esports wasn't such a big thing back then. Otherwise, I probably would have been staying on that road. I'm happy that training took over and yeah. That's my background in brief.
So sorry, just repeat, which game was it that you were...
World of Warcraft. It was the most popular video game back then, before I think League of Legends or something like that is what they play nowadays, or Dota. But yeah. Right.
And so you say you were good at that out of 11 million players. Where in the ranking?
I mean, I don't think everybody. I was playing player versus player, so you could objectively quantify who was the best. We had we were number one rated. You played 2 versus 2 and 3 versus 3. We were number one rated at the point in the game in the world, and yeah, I released videos with 3 million views. Not in YouTube, but there was this sort of gaming website called Warcraft Movies, where they are still.
Okay. Yeah. So it's really interesting that you mentioned that. So do you think that helped you with your trading in any way?
Absolutely. I think it had a big impact when I was gaming. Many things were more of intuitive that have become conscious after in trading. Sort of like when I started gaming, I wasn't obviously really good initially, but I started studying people that were a lot better than me. And I watched their videos, how they play, and then obviously I got obsessed about it. I played a lot and got the necessary experience, started doing things that they did, and then once I was experienced enough, I started out figuring out things that others hadn't figured, and I think that process was kind of conscious with trading. Then that when I first got introduced to trading, I realized that obviously I need to understand as much as I can about trading first, and probably practice on parallel training live, because trading is not something that you can just read from books. But I read all the books. I was reading a ton of books during the earlier years, probably like 100 trading books a year, but nowadays not so much.
Well, maybe we'll come back to...
From that, I pretty much learned to trade, and I think that was a big thing.
Excellent. Okay, well, maybe we can come back to some of the books that you've found useful, because obviously they've done a good job. You're a really great trader now, so I think it'd be good to know which books you sort of found most useful, and we'll cover that maybe later on. Okay.
Sure.
So maybe we could get into a little bit more about the specifics then of your trading today. and give us some more details about what your trading style is, and just generally how you go about trading on a day-to-day basis.
Sure. So we trade G10 FX during news, mainly monetary policy decisions, because they move the markets most. Obviously, there are political events as well that we trade, but those are infrequent. But the process how we trade political events is similar to central bank events. What we do is we create before an event. By the way, we trade always after an event is published. We never make predictions on it.
Okay. How long after?
It depends. It depends how fast we can interpret an event. Sometimes it's really complex to try and understand what the central bank guidance is for interest rates. So it might be from 1 minute to even hour, and sometimes there are patterns after events that we have found out that can be even after 12 hours, for example, with Fed.
Really? Wow. Okay.
Big pattern lately that it retraces the Fed movement.
Okay. So you let the news event happen, and that begins to evolve. And obviously, when the news does occur, the spread on the assets usually increases fairly significantly. So I guess you sort of wait for the spread to come back down to a more normal level before you even start.
Sorry to interrupt, but I think there is a big misconception with news trading that it's spike trading. I don't think that's something that you can do or manage serious capital if you trade during when the spreads are high, and when we have some problems with maybe lower liquidity instruments, we have to deleverage and obviously gradually get into the market. So we don't take a big position immediately because the spreads are high, but we take the positions gradually. But depending on instruments, for example, in Eurodollar, the spreads are really tight even after news announcements almost immediately. There's so many people trading them, but on Scandis, it's a fraction of the liquidity, for example.
Right. Okay. So you wait for everything to calm down, get back to a normal level, and then you'll be executing your trade.
Yeah, I think it depends, because if the spreads, we are monitoring the spreads. If the spreads are low enough and we can see that the market is mispriced, I can show trade examples later, but oftentimes the best mispricings are within, let's say, first minutes when the market hasn't understood the event or it has misinterpreted it, because it's not something that happens frequently, but sometimes it does. The market misinterprets an event and you have a huge whipsaw where you can, if you understand the event well, you can make a lot of money.
Because I'm not a news trader at all, as you know, but one of the things that I have noticed is that when the news comes out, the price will spike in one direction very often, but then if you look at the price an hour later, it's come all the way back down to where it started. So is that what you mean by the market misinterpreting the news, or?
Not exactly. I think misinterpretation is something where the market goes within few minutes to different way, and then it understands that it might react, let's say, for example, to an interest rate decision, which is easy to price for markets. Let's say there's a 50 basis point hike from Bank of England last week. That's an example I'll show later, but it is they hike 50 basis points, and it's partly priced in, but then the market understands that they are also predicting a recession, so it immediately reverses the price action, and based on our pre-event studies, we understand that usually the interest rate decision itself is not as important as the projections or forward guidance, and there's an underlying logic for that price action. But of course, most of the news are reversed. They are not that important. It's really only, let's say, 5 to 7 events a month that are important. And of course, if the events come out as fully as expected, there is not much price action. But what we look to do is we either trade sort of those mispricings. There's a number of different sort of price actions you can trade with events. So there are those mispricing instances which are high probability winners for us. Then there are mean reverting instances, and then there are momentum instances where the market keeps going up when there's a big signal where it's unexpected, the event is unexpected, or then there's an as expected event, or the event is not that important, and then it reverses, like you said, within few hours or even fast.
Okay, so you mentioned then that there are maybe 5 to 7 events per month. Does that mean that you would only trade maybe 5 to 7 times per month?
Per se, yes, it depends on market condition. Like now, obviously, there's much more events than there used to be 2 years ago because there's so much more focus on interest rates. And it depends on data events. Let's say last week, non-farm payrolls was a huge market mover, especially in the Japanese yen, but you kind of had to understand the context. We hadn't traded non-farm payrolls for two years almost because we knew that the Fed is not paying attention to the NFP that much, and there had not been that big deviations from expected. And now this number was obviously huge, but I mean it wasn't that simple in the sense that you had to understand that it's big for yen, USD yen only, not that big for euro dollar, because in Europe they are also raising rates, or in Australia they are raising rates. So there's not that big divergence in policy. So basically what the market has done, they have priced higher rates for Europe and Australia as well. So the NFP reaction has reversed, but for the yen, obviously higher rates means weaker yen at the moment. The yen is, in short term at least, it's clearly driven by the US rate differentials. The market, the usual risk on off dynamic is not driving yen at all. So yeah, these are some things that fluctuate between different market contexts.
So clearly there's a lot of moving parts, I guess, that you need to consider before you take any decision. Now, I think, Aatu, you've got some charts that you were going to use to maybe explain some of this in a little bit more detail?
Yeah, absolutely. I'll be happy to. So, yeah, like you said, there is, I mean, market reactions are different in different market contexts, and yeah, so, but let me share screen to maybe, so this is actually the non-farm payrolls, because I thought it's kind of simple trade to explain. So what happened is that you had, this is 1 minute charts, by the way.
Okay.
So 1 minute time frame, and what happened, there was obviously a huge report. Basically every metric was a beat on expectations, on unemployment rate. I think the 2 big things or 3 big things was right down. So what happened, there was 200k deviation on the number to upside. Then there was unemployment rate was 0.3%, the 0.5% versus 3.6% expected, and then there was revisions up on past numbers. And also wages were 0.2% higher than expected. So across all metrics, it was better than expected. But this was actually we didn't take that much risk, but in this instance, we had studied that the yen is highly sensitive currently to economic data, and we positioned within the first minute. So here, like you said, the spreads, if you position within, let's say, first seconds, they can be high, but what we do is we monitor them, and if once they have calmed a little bit down, usually after 10 seconds, then we start positioning, and in this case, we built a position within first minute, and the momentum went up. In that sense, this was a simple trade, but then again, it looks easy, but back, let's say, last 2 years, there has been also big reports that deviated from expected, but it wasn't that important for market. So in here, I think the crux or the important thing to understand was that the Fed had said that it monitors employment for slowdown in the US economy. And obviously this wasn't the complete opposite of that. So this was green lights for higher interest rate rises.
Okay.
But but this trade only worked on USD yen, not in other pairs, like I said previously.
So looking at the chart there, so did you split your entry over four different entries?
Yeah, four different entries. We split our entries always because it's you don't want to enter a big position instantly in the market. You want to see the execution per position, and then you can build gradually. Sometimes you might get hit. For example, this is at a little bit worse price, this entry here, and so on. So these were obviously instantly profitable, and we usually use stops from ranging from 15 to 20 pips, and also time profitability in the sense that if we don't become profitable fast, we exit some chunk of the risk or full risk, because I mean the theory is that the market is relatively efficient and it should price events quite fast, and based on our experience, that's how it is. So maybe 5 minutes helps to illustrate the extent of the price action in yen. I think it moved from our entries like over 130 pips to upside. We took profits over here for most of the positions. So there is definitely technical factors play a part in especially data events. There's rarely momentum with data, so this was a different kind of data event. That's obviously there was the US GDP 2 weeks ago that also caused a lot of momentum, but that reflects the shift in market dynamic where data is moving the markets more.
Okay, so this particular trade you were in for probably just a little bit less than an hour, I guess.
Exactly.
And that's, I guess that from what you said before, that's fairly typical, although you do sometimes trade for a lot longer.
Yeah, it's really dependent on the signal on the event. Sometimes the take profits might be within 15 minutes, sometimes they might be a couple of days. If there's a really big monetary policy signal, we might be holding for a week, which we think like would become the big driver for markets. It's all based on the fundamental analysis, but oftentimes on these data events, and we compare to history what has happened and what has been historically, like in similar instances, good level to take profits and yeah.
Okay, that's a good example. Thank you.
Yeah, I think I have another one here for the Bank of England. Actually, I have quite many examples, but I think it will take a long time to go through all of them. But on the mispricing front, this is the Bank of England. Let me use a 1 minute chart. This is the Bank of England from last week, which was a much higher risk trade than the non-farm payrolls for us, because obviously here we feel like there is because of the complexity, we have a bigger edge here because we can provide more value on because we understand the event better than other participants based on our research and based on our research on market history, what has happened, what is important, what is moving the markets. So our risk is never constant. It depends obviously on the quality of signal. But what happened here is the Bank of England raised interest rates. This is 1 minute chart, by the way, again.
Okay.
The Bank of England raised rates 50 basis points. It was priced in for around 70% chance in the options curve for 50 basis point hike.
Okay.
And then they maintained guidance for forceful further action. So this is a bullish decision per se. If you look at these two sort of guidance and the rate decision itself, and so the market moved up during the first minute by around 45 pips. But it immediately reversed because they signaled for recession. 5 quarters of negative growth and inflation. Actually, I think in UK the inflation is 13% now, but the Bank of England is projecting it to go to 0.8% in 3 years' time with the currently priced in interest rates. So these two based on history, we knew that these are more important than the single rate decision, because the market prices the longer term rate part, and the amount and extent of rate hikes priced into the market is usually the most important and market moving part. So the market interpreted it as a signal that the BOE might not be raising as much rates as it would be ultimately. And
so Aatu, can I just check then? So I mean, when you're trading these major sort of economic news events, you're not, obviously, from what you've just said, you're not just looking at the headline figure, so the fact that the interest rate's gone up 50 basis points. Are you monitoring the news release for everything that is said during that announcement? So for example, there where you said the signal for recession, is that something that was actually verbally said by the governor when he made this announcement?
Yeah,
okay.
The Bank of England released a statement, and we had obviously identified before the trade that these are the important things, and we were monitoring in the statement we are using Reuters headline feed for monitoring the key parts of the statement. So the monetary policy report is a 70-page document. So a lot of our work involves before the trade is understanding what is important in that document, what is important in the headlines, because the market actually moves because of in the end it's few sort of main phrases that move the market, which convey the big message. Like here, for example, it was the signal for 5 quarters of negative growth, was something that not the single bank, for example, had expected the Bank of England to signal. So it was really unexpected and really bearish economic signal. So we have on Thomson Reuters, we have identified before the trade the most important sentences that the Bank of England or given central bank would say, and that allows us to react really fast when we have predicted the scenarios beforehand. You cannot always predict them beforehand, and sometimes you have instances when you really have to interpret the guidance, what they mean, and that can take time. But in this specific instance, it was possible to react fast because this was easy to understand and assign risk beforehand to it, and basically this went beautifully exactly as we predicted beforehand. So this was a high risk trade. We estimated that we would become profitable almost instantly if we got in within the first few minutes, and that's basically what happened here, as we entered a quite large position within the first 2 minutes, and then the market continued down for 30 minutes or so. And in this case, still our take profits were quite fast, because in the press conference, this is something that needs to be always factored with news. The Bank of England still emphasized that they will keep hiking rates, so it was kind of contradiction to what the impression was from the statement. So we gradually phased our take profits away. In different instances, we might have been holding for longer. But really, the big thing for us is when there is a mispricing like this, we can take a larger position with higher conviction almost instantly and become profitable really fast.
Wow. Okay, that's really interesting. So you mentioned earlier, you read a load of books to sort of get up to speed with this kind of trading. Maybe now is a good time to, for anyone out there who's interested in getting into this style of trading in more depth, could you maybe give a few recommendations of books that would be able to sort of give people this kind of insight that you have around these economic news events?
I think in general there's not really books on news trading in general, and I think news trading is something or event trading in general that is maybe not that well researched, like in academia. For example, there's only the post earnings drift that is well researched, and academics think that it follows random walk when it obviously doesn't. But regarding the books, I think it's imperative to sort of understand. What I got from the books was understanding the psychological qualities necessary for a trader. Obviously, the best traders use news as they factor the news in a way, or not many of the. I mean, there's a million ways to trade, but many of the best traders use news and fundamental backdrop in that sense. And some of the best books are, in my opinion, in macro trading, is Inside the House of Money and Invisible Hands by Stephen Dropney. It's like a interview-based book, and I learned a lot about those interviews in terms of how you think about broader market context, how a big trader, how does the psychology work for a big trader, and so on. And then obviously there's the Market Wizards book, which was the first books that I read. I absolutely loved them. There's directly some things that are prominent in news trading in those books. Like I understood how buy room or self-fact mechanism works, and that oftentimes the market reactions to news are very counterintuitive. And so on. And then another big one for me was David Kahneman's Thinking Fast and Slow, because that really has helped to deal and understand those psychological biases that are in play.
Interestingly, I've just started reading that. Yeah,
I think it's in general, it doesn't matter what trading style you are trading. I think it's imperative to understand like those biases and what parts of your decision making is like intuitive and rational, and how you trigger that rational part of your brain when you're trading, and ensure that's the decision making. The decisions are coming from that, right? Instead of
and controlling the emotions, so that the emotions don't drive your actions, and you've always got that logical mindset. Yeah,
exactly. Either controlling or working with them, because it can be sometimes really difficult to control emotions. So it's just understanding that they are there, and that can really help.
Aatu, let me ask you a question. It's quite a difficult question. What do you think is the one thing that you'd say is the most important factor that's contributed to your success as both a trader and also a fund manager? And I realise it might be difficult to answer, but was there that eureka moment where all of a sudden things clicked into place because you'd realised something about maybe the way the markets move, or something about the trading style that you needed?
Yeah, I think that's a really difficult question in the sense that there are many things that it's really difficult to pinpoint one thing. I think I may have been a bit lucky in the sense that I figured out early that how the news move markets, and I figured that I should be studying them a lot in a sense. But I don't know. I think if you think most important thing, maybe in a sense, creativity is something that is really important when you are thinking about news in general. You really have to try to think differently. I know that sounds like a cliche. Everybody says that in trading, but it can be really difficult to think differently, because it's really intelligent people who are analyzing these events and trading against you. So you have to see fallacies on other people's logic, and then you have to understand that, for example, consensus is most of the time right in terms of news, and then you have to figure out those instances when the consensus is not right on market reaction. So I think probably creativity has helped me most during my career. I think that, and maybe.
So maybe that's where maybe the creativity side is where the gaming side comes in terms of giving you that additional insight.
Yeah, I think so. I definitely agree with that, because in gaming I also figured out things that others hadn't sort of thought about. before, and it definitely gave me self-confidence after being successful in gaming, to to also the confidence that is required in trading, in a sense that you trade against really talented people, and in the long run markets change, and you have to have faith in yourself that you can manage this business, right? So
okay, so this is maybe a sort of a related question, but if there are any viewers out there who are aspiring to become news traders, would you have any specific advice for them in terms of what they should be doing, how they should be going about this? Maybe if they're at a stage of their trading which is behind where you are currently, what kind of advice would you give to them?
yeah, I think I can only speak for myself, and my opinions might be biased on that regard. I think it's really hard to give advice in trading in general, at least for me, on news, because everybody has their own different style. You have to figure out your own style of trading. But if you were to pursue a career in news trading, you would need to, probably the way I did it was obviously try understand, read all the books first, on trading in general. Then you proceed to reading books on macroeconomics, like big trading books, and reading news in general, monitoring how news impact markets, and trying to understand. That's the most important thing, trying to understand what moved the market at a given time, and obviously oftentimes you cannot even pinpoint why the market moved, but sometimes you can, and once you start figuring that out, when you understand why the market did what it did, then you can start transitioning that into trading ideas and implementing trades.
Okay, cool. All right. Well, I've found that incredibly interesting, Aatu. As I said before, this is an area that I actually know very little about, and in terms of my own trading style, which is algorithmic trading, if anything, I get my algos to get me out of the markets when news occurs. So if I'm already holding a position and they view that it's going to be a market move that could potentially go against that position, they'll actually exit my position. So what I do is in some ways the opposite, I guess, of what you do. So I found it particularly interesting today to get an insight into this from a news trader's perspective. So I'd just like to thank you very much for your time today, and wish you all the best with the future of your Darwin THA. And I would say to viewers, look up the details of the Darwin that Aatu manages, and I will place links in the description so that people can have access to that and be able to view that Darwin online. So thank you very much, Aatu.
Thank you, Martyn. It's been a big pleasure to join you, and thank you so much for your time as well.